Good day, I'm Zach Helke for Rapaport News. Do not trade diamonds from Venezuela. That's the message today from Avi Paz, president of the WFDB. Venezuela dropped out of the Kimberley process last week, and Paz called upon board members to take all measures necessary to ensure that they do not trade directly or indirectly in diamonds originating from Venezuela. In other news, just looking at headlines this week, there is quite a contrast between the respective jewelry industries in the United States and India. Several Indian firms reported their quarterly profits, which were quite strong, while yet another mid-sized retailer in the U.S. filed for bankruptcy protection after it had received default notices on loans. I'll get to that in a moment, right after this message. The Hong Kong show was described as being good but not great. Clean goods and higher-end diamonds were really in demand, so Israeli dealers hoping to sell diamonds that didn't make the cut at JCK Vegas were still out of luck at that Hong Kong show. Indian and New York markets are quiet this week, but globally, DE and F colors are in good demand and commanding high premiums, but are growing more difficult to find. The price gap between 90-pointers and 1-carat diamonds is widening, which is creating a new market for consumer-friendly 80 to 90-pointers, and people are buying these up pretty quickly. In retail and wholesale news, diamond and jewelry companies in India had much to celebrate as several majors released quarterly results. Classic Diamonds profits more than doubled, citing lower taxes and interest rates. Profits were up 122% to $1.3 million. Sales rose 13% to $43 million. Operating profits before interest, depreciation, and taxes fell 10% to $31 million. Diamond jewelry manufacturer Suraj Diamonds said that net profits rose 30% to $4.9 million for the most recent quarter. Net sales also grew 69% to $173 million. Flawless Diamond net profits grew 141% to $2 million. The diamond jewelry manufacturer and retailer reported that net sales for the quarter rose 34% to $37 million. Rajesh export sales grew 41% to $589 million, while net profits rose 47% to $11 million. But in the U.S., retailers had their share of bad news this week. Whitehall Jewelers filed for Chapter 11 protection. Total assets were at $207 million and total debts at $185 million. The company secured about $80 million of debtor-in-possession credit. Jacob Arabov, better known as Jacob the Jeweler, was sentenced to 2.5 years in prison in order to pay a $50,000 fine and to make a $2 million forfeiture payment to the government. These charges stem from conspiring to launder drug money. Hearts on Fire is suing Blue Nile for trademark infringement. Blue Nile doesn't sell Hearts on Fire merchandise, but when users type the phrase in the Google search engine, Hearts on Fire contends that Google's AdWord links drove consumers to Blue Nile's site. Plaintiffs seeking money due from Fabrikant Sons filed a new complaint in New York charging that the company principals made about $100 million in fraudulent transfers before filing bankruptcy. Fabrikant filed for Chapter 11 protection in November 2006 and began liquidating assets in June 2007. Consumers in the U.S. grew less confident in June as inflation and uncertainty weighed heavily on their minds. The Conference Board registered the lowest consumer confidence in 16 years in June at 50 points. 1 year ago, the measure was 112 points. In precious metal news, Vietnam temporarily halted gold imports in order to control that nation's trade deficit. Stocks and real estate are hurting the dong, and inflation has hit 25%, but this has caused a move to import gold as a safe haven, and imports are double what they were 1 year ago. The government contends there is enough gold in the local marketplace and hopes to encourage a sell-off. That's all for this week. Don't forget to catch all the latest news on diamonds.net.